let's move on to, that was hopefully not, I mean, it was controversial, but it's nothing that should be surprising. This might surprise a few people. Every time I share these numbers, I get pushback, so I'm looking forward to the pushback. Not because I like debate, but I'm hoping that if there's a flaw in my logic, please help me understand it. This chart, commonly available online, and it shows the world's millionaires. Everyone is a millionaire right now, if you have a decent house, right? But it says that roughly 40% of the world's millionaires are in the US. Let's take a deeper dive into this. This is 2023 numbers. Again, I get what the mainstream media tries to do because just like all of us, they're running a business. And their business is driven by clicks and headlines and sensationalism. I get that. But the mainstream narrative, at least from the media, is that, well, you tax high net worth individuals and they're all gonna pack up and run away. They vote with their feet. But just a cursory glance at this suggests otherwise. You would imagine that if that narrative had any substance, when I look at the top 10, I'd see like Dubai, I'd see Cayman, I'll see Bermuda, I'll see BVI, but I've never thought of Tokyo, Japan as a tax haven. But there it is, number 2. Okay, I see the US is number 1 and number 3, but look at where in the US, this is New York and the Bay Area. When you look at the effective tax rate across the various states in the union, New York and California have the highest marginal tax rates at the state level. Yet that's where the concentration of billionaires are. Again, this is really, really counterintuitive. And so the chart on that just referred to is from Henley and Partners. Not that I'm biased towards them, I just remember that they were at Prague, right? And so I know it has a thing, but you know. But when you look at other numbers coming from other institutions, be it from Switzerland or here or Shanghai, they're directionally, you know, quite similar. They're quite similar. So it shows that the concentration, and then, okay, you take one point in time, does that indicate a trend? No, but if you go back 10 years, it's gonna be the same. The concentration of billionaires or high net worth individuals are in the so-called developed world, right? And so let's look at more robust sources. When I look at, and again, I'm open to any data source that you may have encountered that I haven't stumbled across. But when you look at data-driven studies that are peer-reviewed, and again, I call 2 things. It has to be data-driven and peer-reviewed. So you get other academics who have that background to look at it and sign off on it as well. And what it says, it seems to be, again, counter to the mainstream narrative. In fact, when you look at, especially Christopher Young, he was at Cornell, I think he's at Stanford now. He's written a lot of books and published a lot of stuff, again, from a US perspective, but still, it translates. He is saying that, in fact, the wealthier someone is, the less mobile they are. And I guess you could kind of rationalize that, well, you know, not all assets are portable, right? I'm not gonna pick up my mansion, I'm not gonna pick up the factory and move it. What, artwork, crypto? Yeah, but everything else is kind of stuck in its place, right? So even if I move, what's that gonna do? And then 2, a great part, there's a saying, right? That your network is your net worth. And that comes into all the academic research on social capital. So you spend a huge part of your career building up your network in New York or in the Bay Area. And what you're gonna do, move to Dubai or move to Singapore? And what about all those connections? You can pick up the phone and speak to the mayor, you can get shit done. You move somewhere else, I mean, you're nobody, right? Yes, you have money, but you're not connected, right? And that for a lot of people, that's what really counts. Now, in other words, this whole idea of high net worth people, don't get me wrong, you're like a second residence or a second passport, absolutely. It's kind of like en vogue right now, right? Everybody has like 2, 3, 4. You know, it's a thing. You have a home in whatever, in Barbados or wherever you want to go. But to move your primary residence, that's, the research is telling us, is quite unusual. Now, it does work to some extent if it is that you came into wealth in an emerging market. So you do see more movement, I think, from emerging markets or so-called third world into developed economies. but the opposite, not so much. And you do see some movement among the developed world, but again, the tendency is the wealthier you are, the more you're going to stay in place. Even the Investment Migration Council, their peer-reviewed research on their website, buried somewhere at the bottom, it does suggest the same thing too. And where, one would imagine they have a vested interest in promoting the whole idea that everybody's going to run away. Their research is telling them the opposite as well.